Indeed. Well said. All right, let's do this imbalances class and how to hold and when to hold, because I think it's important to understand all this stuff. Oh, he made 540% there. Nice. You're going to just wake up with some money there. Nice. Let's just start from scratch. I'll open up this SPX chart. Oh, wait, that's a SPY chart, actually. I'll open up this SPX chart because there's nothing here. And I've made this for everyone here. And by the way, everyone can see my screen, right? I'm recording it as well. And so hopefully this is a good enough starting point for everyone to understand how I see imbalances. First of all, what is an imbalance? Let's go through that because everyone has a different definition. The definition that I have is really accustomed to how I understand charts and how I understand how these markets work. And my understanding and your understanding might be totally different, and that's okay. The understanding that I have has served me really well for the past year or so. And this is how we've been able to capture here at George multiple 100%, 1000% moves. And imbalances to me are a secret weapon. They're not the only weapon you should employ in your strategies for trading, but they are a good way of judging where market makers are because they've shown their hand on how they want to operate within this asset. So an imbalance, the way that I describe them, they're not fair value gaps. There's a number of folks that have asked me that question. Is an imbalance a fair value gap? No, that's not how I see it. To me, an imbalance is a big institutional candle like this, where you clearly see a market maker has, with a lot of velocity, a lot of money here, set up a position. And so what I see here is an imbalance. This is a big candle. That's an imbalance. And you have a lot of other imbalances, like you have an imbalance here, and you can draw them out a lot. I just like the bigger the better, because I know that that's when a market maker has seriously shown their hand that they want to be net buyers here for this much volume or net sellers here for this much volume. And if you go measure this move out, let's go do that pretty quickly. If you measure this move out, that was a 1% gain here on the SPX index. And so a market maker deployed literally like $40 billion or $50 billion that day to go pump up the market this much. So this is what I call an imbalance. Versus a fair value gap is something like this. Let's go find an example of one. Do I have a fair value gap anywhere? Here's a fair value gap. This is a fair value gap, right? This is a fair value gap that says, hey, the movement here moved up to the upside in this case, or the downside in other cases, really fast, where it left a price rejection, a wick from one candle to the other. And this is a fair value gap. It's always within 3 candles here. I use it on 50 minutes. There's fair value gaps on the 5 minutes, whatever you want to do. There's fair value gaps all around, but this is what is called a fair value gap. That's different from an imbalance because a fair value gap eventually will get filled. It doesn't have to get filled right away. It can take months or weeks or years. In this case, it got filled the day afterwards, but that's what a fair value gap is. An imbalance, on the other hand, it can stay relevant for a long time. And so what you've seen me do in other charts like this one, let's go open that again so you can see it, is I've literally had imbalances being tracked from 2025. And so if I go back onto the 15-minute here, scale this chart, and I've had imbalances being tracked literally since 2025. They're still relevant today. And so when I see these imbalances, for example, there's an imbalance here, there's an imbalance here, there's an imbalance here, imbalance here, imbalance here, there, and there, and there. These are from 2025. And what happens now is that we come into 2026. And guess what? It's literally the same imbalances that are getting swept over and over again, right? And so this is what I saw. I think it was yesterday or Monday. Imbalances got swept, expecting news hit, came back down, filled this other imbalance, and then kind of grinded up from there. We had another imbalance. This is a new one actually that has been formed, and it does have a wick. It just doesn't have a long, it not only has a wick, it also has a long body. So I consider this relevant. So I should probably add another level there and just be like, this is another imbalance that we should keep track of. And so imbalances to me are where market makers have set up a position that's either bullish or bearish, and at 50% of that candle, they're either net buyers or sellers. And let's go find an example of that. Everyone with me so far? Because if not, I can go over it again. Y'all with me? Y'all with me? Y'all with me? Okay, perfect. So let's take a look at this imbalance, right? This is an imbalance that I've been tracking for some time. And I've said this multiple times, but at 50% of this imbalance, so right around here, you're either net buyers or net sellers. Now, this is how I understand it. It doesn't mean it's right. It doesn't mean it's wrong. It's just how I understand it and how I use it. So what happens for me, and I say this in the chat a lot, when you flip an imbalance above the 50% mark, you're likely to go higher. If you flip an imbalance on the downside, you're likely to go lower. And so if I just track this one imbalance over the course of, let's say, a week or 2 weeks or whatever it is, let's go draw this out, from March 19th, which was a couple of days ago or a couple of weeks ago, all the way to today, what happens? Can anyone see what I see or no? We're at this, let's just use a different color for this. We're at this 50% line of this imbalance, right? This imbalance right here. And let's just make this a new color. Let's make it, it's the wrong time to be doing things in color. What the fuck color is this? All right, fuck it, I'm just gonna do this color. Okay, every time we hit this 50%, Big Z got it right. Every time we hit the 50% mark here, we sell off, right? And so I've tracked this imbalance multiple times. And I saw it today, but I had optimism today because we ended up, we flipped it for a second and then it just like dumped afterwards. But I had optimism today because we were starting to get above this imbalance. And then the news hit right at that imbalance, like a minute or two later. And then we just kind of dropped from there, right? So far, anytime we come to this imbalance, we haven't flipped it, but so far, anytime we come to this imbalance and hit the 50% mark, we've rejected cleanly and then came back down to another imbalance below, right? So, okay, we know what example, or at least one example, maybe we have multiple that we can go through. I definitely know we have multiple that we can go through, that when we get to this area and we don't close above the 50% of this imbalance, market makers and institutions are what? Net sellers. You should know this now, right? We can see this clearly. It's a pretty clear example, but one caveat here, you can have imbalances inside of imbalances. What do you do there? Good question. You do nothing. When there's multiple imbalances that are overlapping on each other, you wait for one imbalance to flip before you do anything else, right? And so in this case, what I'm seeing, and I'll overlay this on top, is you have two imbalances, right? You have an imbalance here, but you also have an imbalance here. Let's go duplicate this. Oops. We'll duplicate this and put that inside of here. And so what happens, right? Again, you have an imbalance within an imbalance. And let's go duplicate this here and put a line there. And what happens at the 50% of this imbalance, this one, not that one, you become what? Net sellers, right? Every single time we tried flipping it, we become net sellers. We didn't even get there today. I was hoping we'd get there today. We did not get there today at all. And so what I would do in this case is wait for this imbalance to flip before I get calls, and then wait for this imbalance to flip before I get other calls. And so this is how I see the world, and this is how I trade. To me, it's dead simple because a market maker has shown you their hand, and you should understand that that's where they're positioned, right? And if I'm a market maker and I'm getting a 50% discount on where I bought originally, right? If I bought it here originally and I'm getting a 50% discount, more likely than not, they're going to buy it unless some news or event takes us down, right? And so that's how I have observed how market makers work and have positioned themselves. Am I talking crazy, or are people with me so far? Can you see it, or is it like just nonsense? Excellent. You're with me. Great. Let's go find an example, not from this year that we haven't seen, and we'll go draw these imbalances on that fresh chart. Let's go do that instead. Because we don't have to look at every single imbalance. We just have to look at the key ones that we find are interesting to us, right? How am I positioning for tomorrow? I literally have a in the money straddle. I posted this in the chat earlier. But on SPY, I got 653 calls and 653 puts. One of them is going to win. I don't know which one, but one of them will win. And let's go back to this chart. So we'll see what happens. Okay. So you can track imbalances all the way from 2025 if you want. And I've done that. That's how I've been trading this day and age, because we're literally back at the 2025 levels, right? So if I go back to this, like if I just draw a simple line here, a very simple line around here, and let's make this a different color. So you can see, I call this, I don't know what you want to call it, but I call it a demarcation line. That just tells me that we're back at a level from like some time ago. And let's make this thinner. Let's make this solid and just make it as thin as possible, right? So where did we bounce from here? 63.23. What gave us that big move up? I'm always curious to see how price moves and how it behaves. Because to me, understanding the behavior of the asset that I trade is much more impactful to me as a trader than understanding where market makers are positioned. They're of good importance, don't get me wrong. Both of them are equally as important. But to me, I'm trying to understand the behavior of how an asset behaves so I can be better positioned and better understand how I want to hold that position, or when I want to cut it, when I want to take quick wins, and when I want to do something else in between, right? And so to me, when I see this level here, we're coming back to 2025, August 2025 levels. This is July 2025 levels. This has been an area of rejection, or if you want to call it resistance, you can call it that. And then what happens in August, we come up, we read liquidity at a level below, and we flip, right? We flipped again. We flipped at this point in time. That got us that move up to make higher highs and higher lows. So if I'm a market maker and I've gone through this period of making money on when I got my position at 63.23, and I'm back to that level again, what's going to happen? If I'm a market maker and I bought the exact same position and made a lot of money, like maybe I don't know, $10-20 billion on $1 billion position, and you're coming back to the exact levels, what's going to happen? What do you think? In 90% of the cases, the market makers, if they're coming back to the same exact level that they bought it at a year ago, they're going to bounce it and do it again. That's exactly right. They put up that same position. We undercut them a little bit. Yeah, don't get me wrong, but they bought it back really quickly, right? What happens? We now got higher highs and higher lows. Look at that. Not rocket science. I don't think it's rocket science personally, but it is what it is. And so in this case, it was not just an imbalance. It was all about understanding how this will behave when you come to that. And so what I was doing that day, and I think I was trading with you guys here, I was like, we should get some calls. And those calls ended up going a lot higher than we originally expected. We ended up reading liquidity, consolidating here. We made money that day. We made money, not today, obviously, because we kind of got chopped up. We made money there. We made money there. We made money there. We made money there, right? So like most of the time, I can see that the level is there. I understand how the behavior is there. And what I use is now an imbalance to better understand how dealer might be positioned, right? So there's no imbalances here until you go back to 2025. That's the reason I have those lines going all the way back, because I'm trying to figure out where's the next imbalance, where's the next layer of liquidity above this level and below this level. So when it goes over, I know when to look for the retracement of the 50% of the imbalance. And when it goes below, I want to look at when it goes up below or above 50% of that imbalance below, right? So what I can do now is just take a simple line, and I see an imbalance here, right? You see that with me? And just make it a different color so you can see it. And I don't need to do this visually for myself, because I just understand if I have something that's dashed or dotted and it's like this color, then I know that's an imbalance, but I'm going to make this as big for everyone here to see it. So great. We have an imbalance below at 62.86 where you're likely to bounce from or maybe reject from. You also have an imbalance here, right? You see that here. Coincidentally, that overlaps with another imbalance. So great, more conviction, more confidence in that play. And then we have more imbalances above. So if I duplicate this, put that there, we have one there. This imbalance, again, you see this clearly, right? You see this 50% of this imbalance. Above that, what happens? You become net buyers. What happened? You tapped liquidity on the 50% imbalance. And what happened? You moved up really fast, really aggressively, right? So at least we see that there's evidence of this theory and it's not just bullshit. Excuse the language. And now what happens? You have another imbalance. And guess what? You come back, tap that 50% retracement. What happens? They didn't let it close below it. What happens? You go up, right? So to me, this is much easier of a system to trade with, because all I need to know is where the market makers are positioned and where they're looking at getting to that play. And if they don't let it close below this, I'm going to be buying calls. If they let it close below this, I'm going to be buying puts. And if they don't let it close below this, or if we get an undercut, I can see that, right? So we have an example here. So we did this undercut on this imbalance, and this imbalance is from in this area, right? We see that. And you might have been faked out here. And this is a good question that Sneaking is asking about higher time frame execution and where I look at it. If I see this, I'm like, okay, they're doing this liquidity grab here. They're doing the undercut. This is a market maker setting up a position to go higher. And the way I can tell is you've had, You've had multiple, oh no, where'd it go? Let's go find it again. My laptop just came online, I just realized, and that's why I got disconnected. Now I got to go all the way back to August. Where was it? Or do I just find another example? No, I want to go back to the same one. Is this August? No, this is July. Where the heck was it? Oh, maybe it's in this day and age. No, it was way back there. Wait, let me just see it again. 1 second. Apologies. Stupid laptop. All right, we'll go back here. This is the one. So this is where I know that this is an undercut and I can hold my calls with full confidence. If I set up a position by accident before that, or maybe at this area, I know that I can hold that call, because you've had this institutional move down that day, right? And this is now slowing down. They might continue selling, don't get me wrong. They might continue selling, and that's totally fine. That's totally okay. But what I see here is an imbalance again, right? We're at that 50% area. But what I also know is that there's an imbalance here from like July or August, whatever that date is, that we've undercut, right? And we didn't let it close below this because we would have gone down to like 63.32, 63.23, whatever. And they didn't let it close below this. They just did the undercut. This is your compression candle where a market maker has set up a position. And now you're likely to go higher and tag this imbalance, right? That's what I say all the time. Like you're likely to go from one level to the other or from one imbalance to the other because that's how markets work. That's how algorithms work. That's how machines work. That's just been my experience. I could be wrong. You have a totally different experience. That's fine. But in my experience of trading in the past year, especially SPX, you're literally bouncing from an imbalance to another imbalance, whether it's a big imbalance or a small imbalance, TBD, but that's how I look at it. And so this is when I knew that, or you should have known that this is an undercut to grab liquidity to go higher towards this imbalance. And guess what? What happens? We tag that area, we become net buyers. This is that imbalance from here, this is that imbalance from here, this is that imbalance from here, this imbalance from here. That's coincidentally also a level that is a relative equal high. And what happened? You come and do a 50% retracement, right? Gap up, dump it, 50%, undercut, go up really high, right? And so to me, this is how I trade. This is how I understand imbalances. And this has worked for me with like 85% success rate. It doesn't always work, but it works more often than not. And so what I also do, sometimes, not always, but I look at the 4 hours, right? See if there's an imbalance here that I really like that I think is worth playing. And so because we're back at the 2025 levels, I coincidentally, maybe this is not a coincidence, maybe this is just how algorithms work, but in a way, the imbalances that I marked on the 15, and you saw me do this on the 15-minute chart, are also price rejection spots or support spots on the 4-hour chart. Is that a coincidence, or is this just how markets work? To me, this is just how markets work. It's not a coincidence. And so the 15-minute imbalances that I marked for everyone on the higher time frames become what? Support and resistance, right? So what happens here? You reject here, that's resistance for some time. You come back down, go to another imbalance. That becomes support, you go to the other imbalance. Then you go from this imbalance to that one, from this to that one. The undercut, and again, 50% here, 50% retracement of this 4-hour imbalance. That's coincidentally a 15-minute imbalance as well. Become net buyers and move on, right? You set up the higher highs, higher lows, double tap, 50% buyers still there, go up. Oh my God, this is not rocket science. This is fucking how machines and algorithms work. And so when I realized this last year, I was like, holy shit, I've been trading the wrong way this entire time. Like, why am I looking at divergence? Why am I looking at 20 different indicators? When it's so clear, at least, I don't know, maybe something changed in my brain, but to me, it became so clear that this is how markets work, right? And you see this, you see the evidence for yourself here. All I did was mark out the imbalances on the 15-minute, and they happen to coincidentally become support and resistance on the 4-hour time frame. And I bet you with 100% certainty, if I go to the daily chart now, there are areas of interest where market makers have set up positions for liquidity. And what do we see? We see the exact same thesis play out on the daily, on the 4-hour, on the 15 minutes, and I bet you on the 5 minutes and the 1 minute, whatever time frame you use, because time is fractal when it comes to trading, works the exact same freaking way. And so what happens on the daily, this imbalance is what? Now a rejection spot. This imbalance is, guess what? A support spot. You come back, tap 50% of it. What happens? You go to the next imbalance. Come back, tap 50% of it. What happens? You go to the next imbalance that we haven't marked out yet, right? And so this is now a daily imbalance that I can go and track. And if I wanted to do, I can draw another line through this and be like, hey, if we ever come back into this daily imbalance, there's a strong chance that we come back and bounce from that, right? And what do we see? We see the exact same thesis play out. Undercut, rip, undercut, rip. 50% of this imbalance go up, 50% of this imbalance go up, 50% of this imbalance go up. So this is when I know as a buyer of a call, I can hold that call with full conviction that they haven't let it drop below these imbalances on the daily, 4-hour, 30-minute, 15-minute, whatever the time cycle is. And 15-minute to me is the best risk and reward. It's the best time frame to look at for me personally. You do what you're comfortable with. If you do 1 minute, 2 minute scalps, go for it. If you love 15 minutes, go for it. If you want to look at the 4 hours, go for it. If you want to hold something and swing them 4 days out, go for it, right? But to me, 15% is the best time frame for how I trade, for how George has been programmed, because I can see the imbalances within imbalances within imbalances very clearly. And you saw me do this. You saw me go from the 15-minute to the 4-hour. I didn't draw any other imbalances. And then I did the daily imbalance just now, right? And so now we come to the session where we can talk about how to hold. And so if I know with full conviction they haven't let it drop below this, I'm leaning upside here. I'm going to hold that call until it goes 100%, 1,000%, or whatever the number is, because I know we're likely to go and tag a higher frame imbalance, right? And so if I draw out the imbalances now for today, or maybe in 2026, right, we see something here. We see an imbalance, right? We had an imbalance. What did we get? Almost came back to the 50%, ripped up. Great. That coincidentally is an imbalance that was a low at some point in time and it's a layer of resistance or support. If you want to call it that, came up, went up, right? 50% came back down, retrace. That buyer's still there, or those buyers are still there. Great. I can hold that call with confidence, knowing that they haven't let it drop multiple times. That is also an imbalance. That is coincidentally a level, right? And then what do we get? We get more imbalances up here. And I don't have to draw every single one of them. I just need to get the key ones. And if they coincide, what's the word? You know, when your brain just goes blank for a second. If they coincide with a level, even better. And so this is an imbalance, right? We see this imbalance here that coincidentally is a support level from a couple of days ago, right? And so whenever I come to the 50% here area here and reject and undercut above and reject, you're likely to come back down. If we come up here and do the undercut below this and stay above it, you're likely to go up, right? We haven't got that. Actually, we did get that today. Look at that. That's why I took those calls. Came up, did the imbalance, did the undercut, went up a little bit, right? And we saw that this morning as well. So great. We have evidence now that imbalances and the way that price moves and behaves at certain levels seems to hold true, right? And it's held true for me personally and how I trade for the last year. If that changes in the near future, it changes. But for the time being, you cannot convince me to use any other system of trading because this system that I built was built for me and built for George because it's the simplest system to understand and use. And I'd rather not get overwhelmed with 1,000 different indicators or profiles or whatever you want to call it, right? And so all I got to do now is just find other areas of interest, imbalance there, right? This is a good one. You have a big imbalance here, right? Right here. This is also constantly under imbalance. And then you have another imbalance up here, right? And this is all I care about right now because this is the range that we're in. And until that changes, I'm not going to draw other lines or other imbalances. And so what might happen tomorrow, if we gap up for whatever reason, you're going to gap up around here because that's also another imbalance or maybe a level. So let's go draw that right around here. And we see that clearly, right? Imbalance. That also became support. Great. That's conviction for us that maybe we gap up around here or around here and then choose to go up and up, or we gap down and then we come down or around here, maybe here and here and here. And I'd be interested in getting calls, especially at that 63.23 area. If that doesn't hold, you're coming back down towards this imbalance. And volume versus no volume change anything. I don't know what that changes for me. You can look at volume. The only time I look at volume is like in the morning because I want to understand if there's going to be some move in the morning or not. And if we're going to get chopped out that day or not. That's literally the only time I use volume. And I just see it on George. I just use it on the back end, or I see it on the page that I've shared with everyone. So that's how I do it. And it's worked out really well. And when I said that we were going to get chopped out today, I was pretty right because I saw the volume was just not there overnight. And maybe it is for tomorrow, but let's go see in a second. Yesterday I said no volume. There's like literally like $6 million. I was like, that's chump change on SPX. Let's go see if it's showing up on George for tomorrow. Oh, 16 mil. That's better. The 6,600 strikes. And maybe we gap up. I have no clue. But it is looking good. You're getting a lot of volume towards the negative downside, 211 bill. Total GAM exposure is still pretty small at 429 mil. But that's the only time I use volume, if that answers your question, Fluxum. I don't know if it does. Okay. So that's how I end up using those imbalances and that's what I used to trade rather. And so let's go through some examples, right? So yesterday, I think I was saying this, I'm getting the 6470 calls. And so let's go look at the chart and look at the timestamps here because I want to be as transparent with you all as possible. And I was saying, hey, I think it's good to get this 6470 call. And 6470 coincidentally was a level that I had marked out. And I was saying, hey, if we flip for whatever reason, this imbalance here, right, at 6428, and we did the undercut and we hold this area, which we did, right? You see that here. That's also coincidentally in the middle of other imbalances. And we didn't close below this imbalance. We ended up supporting it, did the undercut and wrapped up. I was like, you're likely to go towards the next imbalance, which is 6476. So you saw it on the chart here, 6476.61. And so what happened? We got some calls at 6470, right around noon, I think it was. They were down for like 20 minutes or whatever by like 20-30% because I thought we were not going to do the undercut, but we did. It is what it is. And I ended up averaging them as much as possible because I was like, we're holding this imbalance. We're likely to go up here instead of go down, because if they end up going down here, we would have got that move right away. We would have like seen a flush instantly, but we didn't. And so when this imbalance held, and this is where I can have confidence in the play, and I'm going to hold it until it either goes to zero or goes like 1,000%, is because I know with multiple time frames and multiple imbalances, they've been supported, right? And you see that here, you see that clearly. And so like I know with full conviction, if they haven't let it drop here just yet, you're likely to go above and tag this other imbalance, right? I mean, even the one above it, 65.74. And guess what happened? We took those calls at $400, even the 6,500s were green that we took in the morning. And they ran from $450 I got for my average to $5,000, then $6,000, and that expired in the money at $6,000, right? So I turned $450 into $6,000 per contract that I bought. And on my main account, I deployed $6K towards it. That turned into $81,000. On this account, I deployed, I think it was like 8 contracts. That turned into like quite a bit of cash. And so this is how I trade. And I have conviction that if we're not losing an imbalance here or losing a layer of liquidity, you're likely to go tag this higher one. If you don't close below this, you're likely to go above and tag the higher one. And guess what? We gapped up and tagged the higher imbalance. Came back down 50%, retraced, did the undercut, became net buyers, did another double tap here. Maybe we go up again tomorrow. I have no clue. But this is how I trade. And to me, this has been the foolest proof, if you want to call it that, system of trading that I built for myself, because I'm an idiot when it comes to this stuff. And this has served me well for the last year. And when I have multiple layers of liquidity or multiple imbalances getting swept, and they don't let it close below that, I'm going to hold those calls. If they close below that, or we reject at an imbalance, I want to get some puts. I think I was saying that like until we close below this, which we never did, we got like a couple undercuts here. Until we close below this, I have zero interest in getting puts, right? And one thing I missed today, because I was looking at my chart on my phone all day because I was running errands, is that there was an imbalance here that I missed, and I have to go way back for it. It's like right here. And so like when we came into that imbalance, I didn't see this because I didn't have it in my chart by accident. I either moved it or like just forgot to add it there. When we got there, we rejected. I sure got puts towards this area, and honestly, I either wasn't paying attention to the chart or just was not on the screen. I sure got those puts, but either way, like we had some fun with some calls this morning and throughout the day. They did end up working for some of them. For some of them, they went like 40%. I didn't sell them because I was like, I'm going to sell that at 100 or zero. But that's how I trade. And to be perfectly honest, if that doesn't work for you, that's totally fine. If you want to take the win at 10, 20, 30%, be my guest. The way that I trade is trying to figure out how do I get the biggest wins with the fewest moves, right? And so that's really where my mind goes when I'm trading. It's like, do I want 200, 300%? Does it go in the money or not? And that's just how I trade. But it doesn't have to work for you. It doesn't work. That's totally fine. Are there any questions that I can answer here before I got to run on how imbalances work? What gives me confidence in holding a play versus not? And to be honest, when you have these chop days and low volume, just take the win at 10, 20, 30%. I don't update it weekly. I literally just update it. I don't know. The one that I have right now, it's been updated like once in the whole year. That's it. I don't think I've had to update this until we came up to like all-time highs on SPX. And these are some other imbalances that are no longer relevant, or not relevant yet, I should rather say, because we haven't broken out of this trend yet. And until we break out above 66.40, I have zero interest in redrawing this imbalance or redrawing this chart. I've literally been stuck in the same range for a long time. And all I did was just drag out these imbalances towards 2025 because coincidentally, that's really the levels that we came back down to. Everyone with me so far? Makes sense? It should be clear, I think, because it's not supposed to be rocket science. I built this for me, which is the dumbest person in this room, most likely. Flux of mass, when it closes below and then closes above again the next candle, that's an undercut? Yes, that is an undercut. You can see an example here. Oh, and this is how I know that news is coming out. If we raid an imbalance over and over again, like this, in this case, we end up sweeping this middle imbalance quite a few times. And then we did this like between two imbalances. Like I know news is coming. And yes, you can copy the chart. Like I'll send you the link. I think I did send the link in the SPX channel, but it's there. It's public for you guys. That's a resource for you all because you've paid for the subscription or you're here because you're a friend. Like it's all there. Like I'm not hiding behind smoke and mirrors. I share my plays publicly. I share the levels with you all here. I share the trades. I share when I lose them. I share when I make those wins. And I'm trying to be as educational as possible because the goal here isn't for you to just keep paying for signals. It's to become actual traders. And one day it'll click for you. Hopefully it does sooner rather than later. And then you're able to take these big plays, big swings, and be able to deploy 6K into a contract and have full confidence that it's going to hit, right? But that's the purpose of George, is to be educational, is to make sure that you can understand how markets work, how assets behave, because I think that is the utmost important. At least it is for me. I'm a first principles guy. I love it when I can understand the behavior of something before I trade it. I like it when I can understand the behavior of a company before I invest into it, right? Or whatever the thesis is. Like, I want to understand why it behaves a certain way. I am planning to do futures with George. It's on the back burner because A, we don't have the data yet. The data is delayed by 10 minutes. And B, when that API becomes available, I'll implement it to George. It's just a work in progress because we don't have real-time data just yet. It's still in the pipeline, but we're trying to figure out when that will be available. But yeah, that's the class on imbalances and what gives me conviction in holding a play versus cutting it or taking the profit sooner. In days like today, when it's just a grind fest, and I even called it out yesterday, I'm just trying to take the win at like 10, 20, 30%, whatever the number is. But yes, that's really how I trade. That's how markets work, and you can see that clearly as we go forward. So any last questions, or are we good here? People understand it? Excellent. Yeah, this is it's hard to be. Keep in mind, like, winning in this market, even making any money in this market, is an exception, not the norm. The markets are designed against you as a retail trader or investor. And so what I've done is built tools such as George, understand how imbalances work and how liquidity works, because that's how I understand markets fundamentally behave and react. And I don't want to bet against some market makers if they're not giving up a level. I'd rather trade with them than against them, right? Whereas most people will go in and do the exact opposite. They'll try to bet against the market makers. I'd rather work with them than against them. And using tools like George, using tools like liquidity and imbalances have made me a better trader, and hopefully they make you a better trader as well. All right, if we're good, no other questions, I'll post a recording when it's up and running. And I don't know what tomorrow holds, but I can guarantee you we'll try to get some wins. All right, take it easy, y'all.
All right, folks, thank you for attending the class on imbalances. If you have any further questions, please feel free to put them in the paid chat, and we will do our best to answer them. In the meantime, please enjoy the rest of your day and try to watch the launch. That's going to be around 6:28.
You got it. Thanks, Simi. Thanks, all.